Hi, folks, and welcome to the Friday edition, March 12 of Money and Politics. And tonight we're going to be doing something a little different. This is the weekend where around the world a lot of people are going to be celebrating St. Patrick's Day, although it's on March the 17th. Of course, this is the weekend preceding it, so watch your driving. And we're going to be taking a look at a St. Patrick's penny stock pick that was brought to me by one of our listeners, and he asked me a couple of times if I would take a look at a penny stock that he is very interested in, and I will be doing that. And first, I'm going to just say that today I'm not going to spend a whole lot of time on one of the stock Humble that we all have followed, because the story today just didn't change much. We went down 2 cents to close at $2.97. The volume was only a third of the normal. Normal, we would be about, it's a roving average, obviously, but over the last 10 days, it's been averaging about 24.4 million shares. Today, we did about 8 million and change. So where we are is we're just in this lull on Humble, and I had forwardly on my mind. We're in this lull on Humble, and we're just waiting, I think, some news events, and they're going to be coming out over the next month. I think you know them predominantly. We're going to have the ticker change coming up on March 26th, and then we're going to have the audited financials coming out in April. And I think when we hear from Mr. Foote, Brian Foote, at that time that we're going to get some kind of an update, and we'll get some news, and then we can base our decisions. I'm going to remind you that I'll come back to the pricing here. I think a lot of you are so disappointed, and I think you're artificially disappointed in Humble. And why do I say that? Because it's just been lagging. And the early part of the year, the early part of certainly in February, we saw where we just had this explosion of price, and then immediately after the reverse split, we had an explosion in price. So we looked at how much money we had made, and it was substantial, I think, in almost every one of our portfolios. And then it came down. So, you know, it's been down for what? It's only been down, folks, for about, 10 days, something like that, out of the whole year. I mean, this is still a winner, and I'm going to tell you just not to panic. I tell you this every night, but I say this for some of the new people. You don't want to be stopped out. You don't want to get out. I shouldn't say stopped out, but you shouldn't get out, in my estimation. You got to do what you got to do, though. So let's go to the pick for tonight. This is a new penny stock, and as I've told you many times before, I'm not enamored of a lot of penny stocks, but I think, as we see with Humble, there are some penny stocks worth taking a look at. And like I said, this was brought to my attention by one of my viewers, and here is the unveiling of the new penny stock. Dun, da, 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 HITIF. HITIF. And what is that? Well, HITIF is a Canadian company that is High Tide Incorporated. And High Tide Incorporated is in operating stores in Canada. And they are, let me just read from their post here. They operate a vertically integrated company in the cannabis market in Canada, engaging in the design, manufacture, and distribution of smoking accessories and cannabis lifestyle products. I'm going to skip some of this. It operates 73 retail locations in Canada. The company, formerly known as High Tide Ventures, changed its name to High Tide Incorporated in October of 2018. The company was founded in 2009. So that is High Tide. And I want to bring up, let's take a quick look here. In the previous year, we can see that the low for the stock was 20 cents and it had a high of 86 cents, and it is currently at 62 2 cents. Sometimes the stuff is just kind of hard to read here. 62.5 cents. It was up 4.6% today. Now, I think this is an interesting company, and here's one thing I want us to take a look at. Let's take a look at some of these financials here. Let me see. There we go. That's what I wanted. Looking at these financials, we can see, look at the top line in revenue beginning with 2018, and these are in thousands. So that's $8 million, $8.7 million in revenue that then in October of 2019 went to 31.2 million. Then look at that jump to 83.26 million last October 31st. The cost of revenue, of course, also went up correspondingly, which you would expect. But you can look at their gross profit numbers, and again, looking at the difference between how it's grown from 2018, their gross profit from 3 million to 11.3 million to 30.8 million. And as we see their operating expenses again, here's the interesting thing, but from October of 2019, the operating expense went down a bit, went down roughly $1.5 million. You see from 30.8 million to 29.49. So they're still negative on their income here. But they're really turning it around. If you look at the operating income, they went from a negative in October of 2019 to 1.373 million in 2020. So that is I'm always cautious when I tell anyone about any stock, but I'm a little cautious about certainly the penny stocks. So am I saying this is a slam dunk? No, there's no slam dunks. But I do think, first of all, if you're morally opposed, and I'm not a marijuana user, if you're morally opposed to buying this stock, then don't buy it. To the extent that it looks rather interesting, it might be someplace to put a small investment. And I know a lot of the people who follow Money in Politics, because they found us talking about the penny stock Humble, are people who are early investors. They don't have a whole lot of money, and they're looking to put their money where they can get a big bang for their buck. So here is the chart. This is a chart comparing the price. And let me see here. This is a 3-month chart comparing HITIF in black to URTY. I haven't talked to you a whole lot about URTY, but this is a comparison. Let me go real quick. Let's do year to date. And you can see URTY is an ETF on the Russell 2000 there. It's up 34.9%. That is, URTY is big on the small business. It represents a lot of small businesses, which I think, is a decent place to put some money, because I think we're going to have a rebound this year in small business. And as I say, my big theme for 2021 is recovery. So when we look at this, what I want to do is, let me take myself out of here, and I want to go up. And let's see if we can do our comparison chart, because I want to compare that to TSN. Whoops, I want to compare this to TSNPD Humble. And let's make that so we can see it. And here's Humble now in yellow. So while HITIF, high trade, has done pretty good for this year, up 100, almost 200%. For all of those of you who are bummed out on Humble, you can see that you shouldn't be. It's up 370%. Now, some of you might say it might be 370% if I bought it way back when, but not when I bought it here in the, February 8th, a month ago, and was paying $6 and change on that. That's true. But folks, what I would say again, what I've always said, we're not even out of the first quarter. But you can see anyway the price differential here on that. Okay? Now, I always sometimes feel like I got to go longer than I should. One of the things that I've brought up, and again, the oil companies, aside from that, is another thing that we want to look at. And one of the things I brought up to you is the price of DIG. And I want to show you, if I can, let's see what we can get here. I can open this up. So here is the price, and let's just bring it up for the last, I'm going to say 6 months. Oil obviously had been a horrible, horrible investment. But I want to bring up another ETF. DIG, as you remember, is a leveraged ETF on the oil and gas industry. The other one, which is very interesting and you may want to take a look at, and these are not penny stocks, is Gush. Now, Gush, and I'm going to put that in red so we can see it here. You can see Gush is up even more. So DIG over the last 6 months is up 155%. Gush is up 265%. If we look at a 3-month chart, you see that DIG is up 67%. That's 3 months, folks. I mean, that would be good over 2 years. And Gush is up 105%. So the interesting thing, aside from the prices and how they're climbing, is that the price right now of Gush is just under $90. It's at $89 and change, where DIG, and I told you how I recommended a friend of mine buy it, and I bought it at $63. It is now at $140. And so the thing I would say that you could do is, let me see if I can bring myself into the picture here. Well, I can't because the thing that you could do if you were investing here, and let me use this as an example, you could take some profit off of Gush and go down and buy, let's say you had 100 shares. If you had bought 100 shares at 63, that would have been $6,300. That today would be valued at now 100. I'm looking at, DIG. If you had bought at $63 on DIG, the price of that today is $140. So if you sold your $6,300 investment because you bought 100 shares at 63, you sold it today at 140, that would be $14,000. You could sell 100 shares out of DIG for $14,000 and then buy 100 shares of Gush, which is just under $90. So that would be $9,000. And so this is an example of where you're going to buy something very similar. And again, I'm talking about where both of these trades are short-term holds. They're not something you've held over a year. And so what you could do by getting out of DIG at 140, you had 100 shares, that's $14,000. You could jump back into 100 shares of Gush, which would cost you $9,000. You would take out $5,000 in profit, and yet you still have 100 shares of a leveraged ETF if, in fact, you thought you wanted to stay in that play right now. So it's just a way that I wanted to bring to your attention because, as I've said many times before, the hardest question to answer is when do I sell? I've talked to you before about taking money out. Don't just let things go up, 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 and you never take any money off the table. You don't want to do that. You want to be able to take some money off the table here and there and build up your cash position. So that's a play for you all. This is pretty much what I wanted to bring to you today. Don't forget, if you're in the United States, Saturday night, well, actually Sunday morning at 2 a.m., we have daylight savings time coming into effect. So we're going to have a lot more daylight coming up next week and beyond as we move to summer. And if you go out drinking this weekend, I know in a lot of places there are going to be enhanced police patrols. So don't just be careful for the police. You don't want to get a ticket. You certainly don't want to get injured and be in an accident. So drive safely if you're going out to the bars. And please drive defensively. We want you back here next week. Folks, thank you as always. I appreciate the response I've had. I hope that you're getting the value out. I try to bring value to you. I know you want to hear more about Humble, and we'll be talking, I'm sure, in the weeks and months ahead, a whole lot about Humble. So we're not going to let that story go away. So for that, have a great weekend. I'm going to go out and join some friends. And until next week, you take care, and we'll see you then. Bye for now.